Okay, the alternative minimum tax. You will be happy to know that we have another way of calculating tax liability. The alternative minimum tax is an alternative way to calculate taxable income and to calculate the tax on that taxable income. It's an alternative way, not an optional way. So if the AMT tax calculation is larger than the regular tax, then it will increase tax liability by the difference. So in example one, we do our AMT tax calculation, which we will talk about. It's 8,000. The regular tax liability is 7,000. This is 7,000 just the way we've been calculating tax so far. The difference is 1,000, and so the taxpayer will always pay the larger of the two. So the taxpayer will end up paying the 8,000 instead of the 7,000 as his total tax. Now, technically, the AMT is this additional amount, the $1,000, and it's going to be added to the regular tax. So in example 2, we have an AMT tax calculation of 6,000. The regular tax is 7,000. And so if the AMT tax calculation is smaller, it's irrelevant because the taxpayer is going to pay the larger of the two. The AMT calculation is not optional, but few are affected by it. So really you are supposed to calculate the alternative minimum tax for every taxpayer. But the good thing is that very, very few people are affected by it. So often, I mean, you can just eyeball it and tell that there's no way they're going to be subject to the AMT. At any rate, in 2017, a tax law was passed, as you are probably aware, and it took effect in 2018. So in 2017, we had old AMT tax laws in effect, and in 2018, we had the new AMT laws that were in effect, and that tax bill really changed the AMT a lot. So here we have a chart that's from a recent article in the Wall Street Journal that compares the alternative minimum tax collected under the old law and under the new law. So these larger, darker blue lines are under the old law, and these smaller light blue lines are under the new law. So you can see that the new law really, really gutted the AMT, which is really, I think, probably a good thing. But at any rate, you can see that it had a huge effect in reducing AMT collections and the number of people that are affected by it in every income category. Now, we have structured the course around this federal income tax formula. And so here's the formula we've been using for regular tax calculation. Now, the AMT also has its own formula. And so we're going to start with taxable income from the regular tax system, just the laws we've been studying. We're going to add adjustments that increase AMTI. And what is AMTI? It's the alternative minimum taxable income. We're going to subtract adjustments that decrease AMTI, and we're going to add preferences. Now, do not worry about what's an adjustment and what's a preference. It doesn't make any difference at all. So don't get hung up on any vocabulary here or think you have to figure out the difference between an adjustment and preference. You do not. Now, once we add and subtract some things from taxable income from the regular tax system, then we get the alternative minimum taxable income. We're going to subtract exemptions to get the AMT tax base. We're going to apply the appropriate AMT rate, and that will give us the tentative minimum tax. Then we are going to subtract the foreign tax credit and the regular tax liability from the Form 1040. To get the alternative minimum tax. And again, this regular tax liability from the Form 1040, it's just the way we have been calculating tax liability since the beginning of the course. It's nothing new. Okay, so let's look at this AMT formula. The taxable income from the regular tax system, we're going to add adjustments and subtract some adjustments. We're going to add preferences to get this AMTI. Now, the AMT has been greatly simplified. Now, we're not going to cover every detail of it, but these are the big items. The first thing you're going to do when you add adjustments that increase AMTI, you're going to add back the standard deduction if they took the standard deduction. If they chose to itemize, the only thing you're going to add back is the taxes that were included in those itemized deductions on their tax return. So you're going to add them back because they're not deductible for the alternative minimum tax. The next thing you're going to do is you're going to add interest on private activity municipal bonds. Now, we talked about municipal bonds and the tax advantage of municipal bonds. There's a difference between public and private activity municipal bonds. So, read that in the book, review that. But I want you to notice this is not all municipal bonds. This is private activity municipal bonds. Okay, upon exercise of an ISO, you're going to add the difference between the strike price and the fair market value. So, again, in your reading, I ask you to go back and read about incentive stock options to just refresh your memory. And so, when they exercise these stock options, there is an alternative minimum taxable item. That is the difference between the strike price and the fair market value. Again, this is not all stock options. This is only incentive stock options, and those are the ones that get a tax break. The non-qualified stock options do not have any aspects that affect the AMT formula at all. Okay, and then there are some miscellaneous adjustments that you will make to the formula. Now, these things that I've listed here, you're going to add back because these are not exclusion items for the AMT. Now, as I said, there are a few other things that figure in here in the AMT, these miscellaneous adjustments, but I want to cut down the detail of what we cover so that you can get the big picture. And when you get in practice, you can do a little more reading about the AMT. Once you've got the big picture in your head, it's easier to go back and read about it and learn about it. But I'm trying to cut down the amount of detail that we're going to have here in the course as you're getting introduced to this. We're going to do some calculations for Glenn and Maggie. Now, Glenn and Maggie have been through a lot. They lived through the zombie apocalypse. We are going to imagine that they did, and now it's after the zombie apocalypse, and they're living happily ever after. Okay, so this is really good. Now, Glenn and Maggie are married filing joint. Their taxable income is $230,450. They have 2 minor dependent children. They take the standard deduction. Their tax liability for regular tax purposes is $43,657. All right. So we're going to work our way down through this AMT tax formula. So again, we start with the taxable income, just from the rules we've been learning, $230,450. We're going to add back the standard deductions as 2019. So the standard deduction is $24,200. It's indexed every year. Then we're going to add back 2 things that I am just now telling you about them, about their tax situation, is that they did exercise an incentive stock option, and so they have a difference between the fair market value and exercise price of $4,400. Interest on their private activity municipal bonds is $80,000. We have to add that back. And so we come up with an alternative minimum taxable income of $339,050. Okay. Now we're going to move down the formula and we're going to subtract the AMT exemption amount to get the AMT tax base. So what is this exemption amount? The exemption amount is just an amount that you're going to reduce that the alternative minimum taxable income by the exemption amount. So we're not going to calculate alternative minimum tax on this exemption amount. Now here I've given you the 2018 and the 2019 numbers. Let's look at the 2019 numbers. And for married filing joint and surviving spouses, the exemption amount is $111,700. So that's pretty significant. So we basically get to reduce this AMT by over $111,000. Okay, now these exemption amounts, however, are subject to phase out. So if your income is high enough, this exemption amount starts to be reduced. And so the exemption amount is reduced by 25% of the amount by which AMTI exceeds. And here's your charts, and let's look in the 2019 2019 chart. And you can see that the married filing jointly and surviving spouse, the phase out of the exemption amount doesn't even begin until their AMTI exceeds well over $1 million. Now, if it goes up to $1,467,400, then their exemption amount's completely phased out and they won't get any. But you can see, I mean, this is very high income. You're not going to have, well, percentage-wise in the United States, I mean, that's extremely low percentage of people that will be affected by it. You may have more clients, of course, in that range than is representative of the country. So we hope so. So you need to be aware of that. But for Glenn and Maggie, their AMTI doesn't even approach the phase out for the exemption amount. So we're going to subtract $111,700, and now we get their AMT tax base, $227,350. All right. So let's move down the formula. Now we're going to apply the appropriate AMT rate to get the tentative minimum tax. Okay, here are the 2018 and 2019 AMT tax rates, and let's just look at the 2019 chart. As you can see, for both years, and it's been this way for a long time, there's just two tax brackets for AMT, 26% and 28%. And the 26% tax rate applies to the alternative minimum taxable income of 0 up to $194,800, and once for married filing joint, once the income exceeds that, then the rest of it's taxed at 28%. So everyone other than married filing joint, the 26% rate applies up to $97,400. All right, so let's look at their calculations. So they've got $227,350. The first $194,800 per this chart is going to be taxed at 25%. So let's subtract that. And that leaves us with a difference of $32,550. So that remainder will be taxed at 28%. So now we can do our tax calculation. The first $194,800 is taxed at 26% to get $50,648. The remaining $32,550 is taxed at 28% to get $9,114. So we're just going to add those two together, and so their tentative minimum tax is $59,762. So we've gone from this tax base of $227,350, and now we have a tentative minimum tax of over $59,000. Now we're going to complete the AMT tax formula. Tentative minimum tax, we're going to subtract the foreign tax credit, subtract the regular tax liability, and finally get down to their alternative minimum tax. Now, in this example, they have no foreign tax credit, and the regular tax liability, as we said earlier, was $43,657. So they are going to be subject to the alternative minimum tax, $16,095. Now, remember that this alternative minimum tax is added to the regular tax liability, and so what they're going to end up paying is this tentative minimum tax. So their total tax liability is going to be that. So let's look back again at this chart for the effect of the new tax law on the AMT. Now, when we look at the income brackets here, this is they divided their data by adjusted gross income. So people with less than 250K of adjusted gross income, less than 500K, even less than $1 million in AGI, you can see that the fraction of people who are affected by the AMT is just minuscule. Now, when we look at taxpayers who have $1 million or more of income, again, with the new tax law, the number of people affected and the collections certainly has decreased. But really, maybe, I don't know, eyeballing it, maybe it fell by 2/3. It did not fall percentage-wise. It didn't have as nearly as much of a decrease as the lower income people did that make less than $1 million. So why do you think that these people that have $1 million or more of AGI, why their AMT did not decrease as much as these other people, based on what we've been talking about here? Well, because one reason, not the only reason, is because of this exemption amount phase out. So for married filing joint, you can see that the phase out ends at roughly $1.5 million in 2019. And so people that have more than $1 million of AGI basically end up with no exemption amount. So that increases their AMT tax base and helps make relatively more of them subject to the AMT. Okay, so income tax planning principles, reduce gross income. If you've got private activity municipal bonds that will push your client into the AMT, shift them to the public purpose municipal bonds, whose interest is excludable for regular tax and excludable for AMT, because this private activity municipal bonds really is what shifted Maggie and Glenn into being subject to the AMT. Also, avoid additional interest and penalties and taxes. So if clients have large AMT add-ons, don't forget to calculate the AMT for income tax withholding and estimated taxes, because you want to avoid underpayment penalties.